Welcome back to the Malaysia Money Matters show. It's Friday, the 23rd of May, 2025.
And today, we're doing our deep dive into the latest financial and economic news.
That's right. Our mission, as always, is to quickly unpack what's most important for you to know today from the sources we've gathered.
Okay, let's jump right in then, starting with the Malaysian company scene, some earnings news.
Sounds good. Let's unpack public bank first. Analysts seem to still see it as a pretty strong defensive stock.
Yeah, they do. Even though the Q1 profit was reported as lower growth maybe, it was actually up 5.6%.
Right, but the management did lower their outlook for the rest of the year.
That's the key bit, I think. They flagged a drop in net interest margin, how much they make on loans, and they're also bracing for a weaker economy.
But analysts still like it.
Seems so, mainly because of its solid business, a decent dividend forecast around 5.2%, and importantly, that RM 1.2 billion asset quality buffer.
Which is basically money set aside for potential rainy days, loan losses, signals some strength.
Exactly. Okay, moving on to CelcomDigi.
Yeah, they kicked off their financial year pretty stably. Net profit up slightly, about 1.9%.
And a 3.7-cent dividend declared too. They saw some growth in postpaid, home, and fiber subs.
But moderated growth overall, right, due to strategic shifts.
That's what they indicated. But what really stood out, I think, was the progress on the big stuff network integration is now 78% done.
Right.
And they're harmonizing billing systems. That's the kind of foundational work that should pay off later.
Right, groundwork euro. Now, Sunway, they had a really strong Q1.
Yeah, pretty impressive. Net profit up nearly 11%. Construction was the big driver.
Big drivers, right. Profit there surged, what was it?
A massive 170%. And this was largely down to faster progress on, interestingly, data center projects.
Data centers, okay. So that's a key growth area.
Seems like it. Property investments help too. And they've already secured RM 2.2 billion in new orders, targeting maybe up to RM 6 billion for the year. Strong momentum.
Okay, let's quickly touch on a few specific sectors. Tumai.
Record Q1 for them. Sales and earnings up 33%.
Directly linked to the gold price rally, I assume?
Absolutely. Clear connection there. And pressed metal aluminium also saw profits rise about 13%, and they lifted their dividend. The higher metal price is helping them out.
Okay. On the flip side, Dayang Enterprise Holdings, they secured a Petronas contract.
They did, yes, for a landing craft tank. But despite that win, their Q1 net profit actually dropped quite sharply.
How much?
Down 56%. They cited high operating costs and significantly much lower vessel utilization, only 26%. So tough conditions there.
And the glove makers. Still a mixed bag.
Very much so. It really highlights the pressure on that sector. Kasan, for instance, saw a 13% profit rise in Q1.
But others struggled.
Yeah, like Supermax, which reported a larger quarterly loss. The core issue seemed to be softer demand globally and really intense competition.
Especially from Chinese rivals, right? With lower prices and the U.S. tariff situation complicating things.
Exactly. It's a tough environment for them.
Okay, so that's a snapshot of the local corporate scene. How does this all fit into the bigger global picture? Let's shift to international news.
Right. Starting with the Eurozone. Private sector activity there actually shrank unexpectedly in May, according to the latest PMI data.
Shrank. Wow. Services were hit hardest.
Yeah, worst performance in 16 months for services. It really suggests the Eurozone economy is, struggling to get solid footing.
Although, wasn't there some resilience in manufacturing? Maybe linked to trying to beat potential U.S. trade levies?
That's one interpretation, yes. Some pockets of strength, but the overall picture weakened.
Okay. And closer to home, Singapore. They reported strong Q1 GDP growth, 3.9%.
But, and this is a big but, they flagged risks of a technical recession.
A technical recession, right. 2 down quarters. So despite the good Q1 number.
Exactly. They kept their lower growth forecast for the whole year between 0% and 2%. Global tariff tensions are casting a real shadow.
Makes sense. Now, across the Pacific, the U.S. politics and finance mixing again.
Yep. The U.S. House just narrowly passed President Trump's big tax and spending bill.
Expected to add quite a bit to the national debt, isn't it?
Substantially, yes. It extends tax cuts, boosts military and border spending, but also tightens eligibility for some social programs.
And these concerns over U.S. debt? They loop back locally, right?
They do. It's part of why investors are leaning towards safe havens, like gold, which helped Tamai, as we saw. And interestingly for us...
Ringgit.
Exactly. The ringgit is actually tipped to potentially gain the most among Southeast Asian currencies if exporters convert their overseas earnings back home.
Oh, interesting. Why is that?
Well, partly because Malaysia apparently has quite large foreign currency deposits sitting there, and this potential comes amidst, general U.S. dollar softness and those concerns about U.S. debt and fiscal policy.
Fascinating link between global policy and local currency potential. Okay, a couple more quick international points. Energy.
OPEC Plus members are reportedly talking about another potential big oil output hike for July. Maybe 411,000 barrels a day.
Following similar hikes in May and June. So that'll keep influencing oil prices.
Definitely. And regionally, China and ASEAN finished talks on upgrading their free trade area version 3.0.
Anything specific stand out there?
They've included a new chapter specifically on the digital economy. The aim is to boost regional recovery.
Okay. And finally, tensions still simmering in the South China Sea.
Unfortunately, yes. China and the Philippines traded blame again over a confrontation near a disputed reef. Just highlights the ongoing friction there.
A reminder of the geopolitical backdrop. Okay.
So quite a lot happening across the board today.
Yeah, absolutely. Looking at everything we've just discussed, the company results, the global economy wobbles, U.S. policy, ringgit potential, what piece of news stands out most to you today? What feels most significant or maybe exciting?
Tough choice. But I think for me, connecting the dots, it's that potential for the ringgit, the idea that it could strengthen significantly if exporters bring funds home.
I think I agree. That feels particularly interesting because it connects those big global shifts, U.S. dollar, U.S. debt concerns, directly to something tangible here in Malaysia.
Right. It's not just abstract global news. It could have a real impact locally, tied to our own economic structure, those foreign deposits.
Yeah, exactly. It's a potential bright spot driven by external forces interacting with internal strengths.
And maybe, a final thought for you, our listener, to consider from all this. How much is the ringgit's fate really in our own hands, driven by local policy, versus how much is it swayed by these huge global capital flows and political decisions made elsewhere?
That's a great question to chew on. Something to think about as you go about your day. Thank you for joining us for this deep dive.
We hope this quick rundown helps you feel informed.
And please, make sure you subscribe to the Malaysia Money Matters Deep Dive for more insights like this every day. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.